Hello traders and welcome to another video analysis. Today is Thursday, the 7th of January 2021. We are going to take a look at the Forex calendar and then we will do some technical analysis. Let's just swipe down towards today's date to see what is going on the markets. As you can see, there were some data released during the night, but none of them were particularly interesting for the traders. Today, however, we will have plenty of data from Eurozone. We got the ECB economic bulletin at 10 o'clock. We got the consumer price index and the retail sales data from the Eurozone scheduled to release at 11 o'clock a.m. And the consumer price index has a high impact on the markets. Because it's of course related to the inflationary pressure and monetary policy by the European Central Bank. So we will see how the consumer price index will affect the prices. The other interesting data is the consumer confidence scheduled for the release at 11 o'clock as well. During the New York session, we have some data as well. We have a challenger job cuts at 1:30. We have a trade balance, unemployment claims, and continuing claims at 2:30, and then at 4 o'clock we got the key event of today during the New York session. Of course, ISM non-manufacturing data scheduled for release 4 o'clock. As you can see, the market participants expect a deterioration this month because the previous reading was 55.9 and the forecast is 54.5. So an even deeper deterioration in ISM manufacturing will likely result in another wave of a dollar weakening across the board. There is another data coming on 2:30, trade balance from Canada and IV purchasing managers index at 4 o'clock as well. Kind of an interesting data. I think we should take a look at the US dollar to the Canadian dollar. And then of course we got a speech at 7 o'clock. FOMC member Charles Evans will give us a speech. So two key data events for today: consumer price index 11 o'clock Eurozone, ISM non-manufacturing index data release at 4 o'clock during the New York session. So I think we should take a look at the US dollar to Canadian dollar. I think we should take a look at the SP 500 and the Dow Jones indices as well. And for the market related to the consumer price index, well, it's obviously euro to dollar. But I think, we'll take a look at the euro to dollar because that's the most traded market in the Forex. So I think, this is the plan. This is the plan. So let's follow the plan. What do we start with? S&P 500, right? S&P 500 daily time frame chart. Let me just zoom in a little bit, and then you can see what do we have here. The recent 2 days had been very interesting because we got this level of 3,780, 82, 83. Tested twice. The first time we've done the new all-time high, then we have tested it, but as you can see, we got this long upper shadows on a daily time frame chart. Well, this is clearly a sign of something. I think it might be a sign of incoming bearish pressure because, of course, the value of the British American, of course, companies is very, very high. So it might be a time to take some profits off the table, mainly because there is a change in a president of the United States, right? So there is a new president, Joe Biden, and some people might not actually, some investors, some people might not actually see this change as better for the United States. So they might be realizing short-term gains here. But as long as we trade above 3,674, the traders cannot be really certain about the top of this market, because we need to break lower to confirm it first, and then of course the another confirmation, the key confirmation, will be when the 3,529, 3,549 zone is clearly violated and the daily time frame candle, daily time frame candle is closed below this level. So for now, please pay attention to what is going on the SP 500 index before the end of this week. We have Dow Jones. So this will be that ticker. So what do we have here? The wedge pattern that I've been trying to show you on my charts didn't actually work that much, because we have a new high and the market broke above this upper line of the wedge pattern. It looks more likely a kind of a as they say, the F flag, or the flag pattern. I call it the F flag, which indicates another wave up apparently. So this price action wasn't the falling wedge, but despite of the fact that it looks very, very nice for the market top and then some kind of a correction, but it didn't happen. We got this big pin bar here that shows strength of the bulls, of the bullish camp. So we might even acknowledge that. Of course, the other price action looks pretty much obvious right now after the fact, because we just broke above the upper trend line of this. Let's say this is the F flag pattern, and we are heading higher towards 31,000. Yes, we are recently even hit the 31,000 points. The high was made at the 31,046 points. So the Dow Jones Industrial Average is still going up. There is really no sign of any kind of a trend reversal or like a trend termination, as long as we are trading above the 28,959, 29,197 points zone. Then of course the uptrend is still being continued, and the value of this in this index will be just rising higher. And at the end of this analysis, of course, we should take a look at the euro dollar. As you can see, we got this bearish engulfing pattern, but it didn't work. So we can simply remove that from our chart. This price pattern you see now looks like a falling wedge for sure. If this is a falling wedge, then our strategy would be that there will be some sort of the correction or pullback on the euro dollar. Basically, it might be very, very dynamic, very, very sharp. But so far it didn't happen. The market bounces from this lower trend line, lower wedge line, and as long as we trade above 1.2200, the market is going basically up, right? The market is still skewed to go higher. The recent high was made at 1.2349, so this is our intraday resistance as well. But if we will get below 1.2273 and definitely somewhere below 1.2230, then there is a chance that this scenario will work. Basically, so we have to see what is going on the market, keep an eye on it, and then of course act accordingly to the developments. The last one I think we should take a look at is US dollar to Canadian dollar. What is going on here? We are still below this trend line. Of course, we got small bounces. We got some kind of a let's say small breakouts, but they didn't work. 1.2782 is the level of the resistance. It held the bullish pressure after the new low was made at the level of 1.2664. Then of course we have another dominance of the bears, and the new low was made at 1.2629. So right now 1.2689 is the intraday resistance, and of course, as you can see, we can just make this line longer, and it's clear and obvious that the market is trading below this line. The short-term trend is still down, but please pay attention to the divergence between the price. As you can see, we got the low here and new lower low here, and the RSI indicator, because there is no new low on the RSI. So we have a divergence between the price and the indicator, the momentum indicator. This move down is not made on the very strong momentum as it was made here on the previous swing low. So any bullish attempt to break above 1.2689 and then 1.2782 might be the result of a market trying to trade this bullish divergence. If the 1.2782 is violated, we have a daily time frame candle close above this level, then of course next target is a little bit higher, 1.2928, 1.2955 as a top of the rally, but the technical resistance is 1.2928. That would be interesting to see, because one point or another, this divergence will be resolved anyway, will be traded by the market participants. The key is now to break out of this downtrend, right? To break higher above 1.2782 basically. So please keep an eye on this market. We are keep getting lower, but not the momentum is not accelerating. There's no bigger momentum on the US to the Canadian dollar. We might be just making some grounds for the short-term low on the US dollar to Canadian dollar market. So this is my point of view on the few of the markets. Thank you very much for watching this video analysis, and I hope I see you guys tomorrow for another bunch of data, and then of course another charts with technical analysis. So see you tomorrow, guys. That's everything for me. Take care and bye bye.